Hey all, welcome back to the channel, Fully Invested Fi. Like the title says, I'll be covering why I'm not worried about NAV erosion with all my high yield income investments. No, this topic comes up a lot of questions about it in the comments and just in generally in the space. So yeah, for that, I'll go through my investment sheet and kind of how I track my returns there, through Snowball Analytics as well. We'll also even go through Portfolio Visualizer, which I love as a website to backtest things and just kind of show how I look at things and how I think about things when I'm comparing funds. And even through Seeking Alpha, just to go through all the different, dividend distributions and just kind of seeing how it's consistent or not. And yeah, through all that, hopefully you'll get like a full picture of things. And also just wanted to mention too, the last 2 weeks, the last couple videos actually were actually scheduled posts, and even just like the posts I've had, because I was actually out on vacation the last 2 weeks, and those were all pre-recorded videos. I was in Japan for 2 weeks with my girlfriend, who's now my fiance, because I proposed and she luckily said yes. And yeah, so it was an amazing trip. This the kind of stuff that I love doing, and then also just the kind of stuff too that's being enabled by how I'm living out of my brokerage too. So it's great to be able to just enjoy that stuff now, and not delay it. So that's probably also the reason why I haven't seen any like portfolio update videos and paycheck investing videos. I missed one there because that was going on, but now I'm back and fully refreshed and relaxed. So look forward to me being back in the swing of things. And also, as a quick note too, I just want to thank everybody because I've actually reached monetization while I was away on my trip. It happened 2 Tuesdays ago. So yeah, I hit the 2K sub and 4K watch hour requirements, and that's super exciting. So all my videos are monetized now. And yes, stay tuned for once I get my first payment. Not quite there yet, but I'll be doing something exciting there so you can kind of follow along how I'm doing with my earnings. I want to be transparent with that as well too. So when the first payment drops, I'll do a little video on that, of what I'll be investing it in and how you can follow it along essentially. And yeah, let's just dive in. As usual, we'll just do a quick recap of like the strategy that I use in this portfolio. So I basically live fully out of my Robinhood brokerage account. I invest my full paycheck, and then that kind of gets split into 2 buckets. It splits into the growth bucket and the dividend growth bucket, and roughly 40% of my paycheck goes towards that. And then that's ideally a portion of my portfolio I'll never sell, and we'll just keep compounding. And that's like growth engine for the portfolio and where I'll get my capital appreciation. And then also there's the high yield portion of the portfolio, which is its goal is to generate income. So that's about a little over 60% that's being invested there. So all that money just stays in the portfolio. The dividends drop, pays down margin. It's just like a cycle. So like the idea is that no money ever leaves the portfolio as far as having to sell an asset or things like that. What I do is I borrow against the assets on margin at a really good rate compared, like that's lower than my mortgage. And that's what pays my bills and expenses. And hopefully I just rinse and repeat that until hopefully I reach 5 by 40. So that's the whole process there. And I have another video where I deep dive on a lot of this, and I'll link that on top. But yeah, that's the process. So yeah, as usual, big disclaimer that none of this is financial advice. This is really just for entertainment purposes only. You absolutely have to do your own research. What I'm doing is very high risk given the strategy that I'm running and given all the margin that I'm using. So I would not recommend this for most people. But yeah, let's just dive into the topic at hand, NAV erosion. So let's just pop over to my sheet here. And yeah, I guess right off the top of the bat, I guess I just want to say with like the high yield investment portion of my portfolio. So basically this money over here, right? The income portion, this is the growth portion. So yeah, the goal of that is purely income. So I think a lot of people kind of approach that in the concert saying, oh, you're hampering your growth and things like that. But the idea behind the high yield income is, it's in the name. It's for the income. It's for that monthly income, the weekly income. I'm not expecting that to grow. On the contrary, I'm expecting that to stay flat or erode. So I am expecting that NAV erosion. For me, as long as the funds keep producing regular-ish income, and I say ish just because yes, I know the income will fluctuate, and also which is why if I am going to consider retiring on these or reaching FI on these, I'd want to buffer things by at least 2, maybe even 3 times what I'm earning currently to smooth out those bumps essentially. So if it keeps producing regular income and then also is generally staying green in total returns, I'll be happy. So as long as the income doesn't go to 0, right? So even if something goes from paying, I don't know, ULTY, which is at 85% now, if that dips down to 50%, 50% is still an amazing yield for me. That's way more than the 4% they recommend, right? If you're going to retire on something. So I'm totally fine with that fluctuation, and I'm buffering for that just in case. But yeah, so why I'm not worried about that is because over half my portfolio here, as you can see it here, so that's like with the allocation there, that's 54% of my portfolio, call it 55, is in growth. So this is where I expect my capital appreciation to come in the portfolio, right? So yeah, the value here is 142K inside a total value of 260K for the whole portfolio, right? So that's where I'm hoping to get all the capital appreciation. And my thesis there is that like the capital appreciation from the growth side will far outpace any NAV erosion that's happening on the income side here, right? So yeah, you can kind of definitely see here that there has been some NAV erosion when you compare to like what I've invested and what the market value is. But what I'm kind of keeping track of and what makes me not worry about stuff is I track the total return versus just the real kind of gain loss there, right? So if we pop over to the top here and kind of like switch over to these funds, and I hope you guys are enjoying like the more zoomed in thing. I did 125% for people that were mentioning it. So yeah, if we go over, slide over to the high yield funds over here. So I always have like two columns here. So I have like total return and then the normal gain loss percentages, right? So you'll notice that like, if we look at just normal gain loss of just like your book minus market value, practically all the high yield stuff is in the red, right? Except XPAY here, which is nice. So that is technically the NAV erosion, right? It does happen. I see it every time. But the thing that I keep in mind is dividends that come in, right? So all this here, this is real money that's coming in. That's dividends that are getting paid. And I just count that as the total return and total profit, right? So this is keeps me motivated and keeps me not as worried about it. So you can see here, for example, so XPAY, this is actually in the green, which is nice. Here it's actually quite a bit in the green because this is like carryovers from previous funds. This portion of money was invested in previously. I used to be invested in BST, which was yielding 8% for a long time, and then a brief stint in Cornerstone and CRF, which kind of gave me like $6,000 at the time over several months. So that's kind of rolled in. So I'm just kind of counting all that money together, given that that's that same money kind of making its way through the pipe. So quite a bit in the green if I factor that in. Yeah, NVDY, NVIDIA's covered call ETF. That's like quite nicely in the green, given that I've gotten over 14K in that. And yeah, so this is probably the longest one that I've been invested in as far as high yield income stuff goes. I'm actually almost halfway to how much money I've invested in and how much I've gotten back. So getting closer to that house money. So once I reach 100%, technically that would be free money on top of whatever I have invested in. And I might actually add a column for that in the soonish. It'd be nice to keep track of that, of how close I am to reaching house money essentially on all these funds. But yeah, you can kind of really see that, yeah, HOOY, NVDY is in the green. HOOY just eked in the green, and this is a fairly recent investment, so that's to be expected. YMAX, this was previously also invested into YMAX, so that's heavily in the green as well. ULTY, that's recent investment, but still just slightly in the green. Same for BTCI, which was invested in BITO before. Only one really in the red, even with total return, is MSTY, which has been going down. But I'm not worried. I'm sure that will bounce back as Bitcoin bounces back up eventually too. So you can kind of see this is why I'm not worried as much really because of that. So that's why it's always good to kind of have that split view and just kind of keep the big picture in mind as far as like total returns and total profit for the funds, right? So yeah, to recap, you do see the NAV erosion. It's there, but because of all the dividends that get paid out, the real total return and profit is kind of this really. Because I don't know, say I wanted to rebalance, right? And sell NVDY, for example, to rebalance into YMAX one day or something. Technically, I'd still be really 5K in the green because, like, yes, there's a 9K loss I'm taking there, but then I got 14K in dividends, so those losses would be offset, really, from those dividends. So your real gain really is 5K. So yeah, again, just to show this in a different light, essentially, in Snowball. And the numbers here will be a bit different since there's not going to be the carryover stuff, so it's kind of raw numbers there, right? So we go over to the anchor funds here, which I consider for XPAY, YMAX, and ULTY, even though they're funds of funds or just contain multiple stocks. So yeah, all in the green here, 11% for XPAY, 2% for YMAX, 1% for ULTY. We switch over to unrealized, slightly in the red for ULTY, slightly in the red for YMAX. And these are because I recently just fully went in these. And then XPAY is in the green, which is nice, which matches what you saw on the sheet earlier. If we go back to the stocks, same thing. MSTY and BTCI in the red like you saw on the other sheet. HOOY's in the green, NVDY's in the green. And then again, of course, if you switch to unrealized, then this kind of roughly matches what we saw in the sheet, right? So that's in the red, BTCI's in the red, HOOY, MSTY but I'm always looking at the total return and the total profit there. And the thing too is that, and if you factor in like the distributions, right? So one way like looking at it is like say through seeking alpha. So for example, for ULTY, right? If we look at the distributions, for me, yes, the fund could be eroding and prices loaded from like 6.5 to 5.6 or whatnot, but like look at how regular that income has been, at least since they switched to weekly and also bull market and everything. But it's been nice to see how relatively regular the income has been, given all that. And even though the fund is eroding, it's been paying pretty consistently. Not the case for all funds, but if we switch to YMAX over here, still up and down, but kind of mostly even, probably trending down a little bit. But if you kind of go there, kind of see all the weekly distributions for this year. If you look at like something like SPY, which is something I'll probably be investing in eventually, just as a safer high yield fund. SPY is crazy consistent when you look at this, right? It's amazingly consistent actually. So they've been really good. And yeah, one way I actually like to compare all these funds too when I'm considering investments, for example, is using Portfolio Visualizer, which has a great backtest functionality here. So yeah, you can kind of just cut your portfolio here. For example, I put SPY, T-SPY, and DTE to compare. Right now I'm doing invest dividends, display income, and just to backtest it. So you can analyze that and you can kind of really see the actual return that you would get or the potential returns you'd get. So SPY in that time. So this is basically capped to January. So year to date, essentially, just because I think that's when T-SPY came out. And you know, obviously S&P has done really well, has recovered really well since those April lows. So at 10.6%. And these, as expected, I'm not expecting these to match or exceed the S&P 500 just because they are covered call ETFs. So you can see that NEOS here is the best of the bunch here at 6.5%, T-SPY coming up 5.53, and then XDT at 5.75. And also you can kind of maximum drawdown. So SPY overall has been really nice. It hasn't as much drawdown as the others while paying out income. So yeah, you can kind of see there, right? So SPY here dipped the least during April, actually. So whatever strategy SPY is using is working really well. And also, yeah, didn't recover as hard, obviously, because of the covered calls, but still hanging in there in second after SPY. And it's, yeah, just dipped the less overall. And then you can kind of, if you scroll down, you can kind of see the income. So obviously XDT, this one has like higher yield, right? So this one is like more of like 30% yielder. And then SPY and T-SPY, those are in between like the 10 to 14% range, right? So yeah, you can kind of see that you're taking more risk with DTE, but you're getting a lot more income. But if you factor in the total return, these are actually all pretty close. And then what's nice too is that, say we want to just double check everything without dividends reinvested, right? And so like also those numbers would be a little bit more optimistic because of the drip, just because like, this is assuming dripping everything. So like, for example, my numbers, total profit, that's just factoring the total profit of like raw dividends that I get into the gains, right? So there's not that compounding effect from drip. So that would actually be a little bit less total return wise if you factored that in. But yeah, without dividends reinvested though, we can kind of see here that SPY obviously still killing it. But surprisingly, SPY actually held up. It didn't NAV erode at all. Just it actually gained 1% in that time. T-SPY has lost a little bit, 0.6%, 0.56%, nothing. And DT obviously has the most because it's a higher yielding product, right? So yeah, they all kind of have different strategies, different risks and rewards and stuff like that. And yeah, actually kind of seeing the two, yes, and I've been thinking about this for a while, SPY and probably XDT, just because it's like, yeah, two different strategies on the same index, but that follow it relatively well, is that I'd probably invest in that probably in the next few months. I don't know when I'll do it. Right now I'm just kind of focusing on kind of things like ULTY and some higher yielding stuff and want to build that base. And then probably gradually I'll start kind of building a base on like some of these safer yielding ones as far in the high yield space at least. So yeah, that's pretty much the video there. So yeah, to recap, really not worried about the NAV erosion. So yeah, I've showed this in other videos, but just kind of to just really deep dive on it. Like at the end of the day, I look at the total return and you look at this is all green, like even, and then of course, like the caveat is that we'll have to see how this performs in an extended bear market and like how it recovers compared to the market and things like that. Because it will dip as much as the market, but will not recover as high. So yeah, for example, just a little example of that, like when the big dips happened in April, like this column became like pretty red, right? Given that everything dipped. But as the market recovered, like obviously these took a bit longer to recover, but like this is all back in the green when you factor in the total return, right? So it's like, yeah, even as you're kind of getting those dips too, you're getting those dividends, you keep getting them, right? Depending on the fund, maybe semi-regularly or not. But yeah, it's, yeah, total return is king for me, and total profit really. So yeah, you can kind of see that in my portfolio. If you follow my Snowball analytics page, yeah, the link is in the description of my videos. You'll kind of basically come to this page here, and yeah, you'll see all the same information that I was showing, all the pies, all the total profits for everything. Yeah, love sharing that stuff. Yeah, I was surprised to see in the community tab actually that somehow my portfolio's in the trending portfolios here, which was nice to see. So thanks for everyone checking it out. But yeah, you can definitely follow me along there. And then also Blossom Social. We'll see how this does once Robinhood Social comes out. You guys probably saw the news last week. But yeah, might have to maybe switch to that. We'll see. But for now, still building this up. And best way to see my trades, and you can also see that as well through Snowball. But yeah, you can follow me along there. Yeah, as far as next video, given that I have a bit of a deficit on the portfolio updates, I'll have to play catch up on that this weekend. So I'm gonna wait for this week's dividends to come in, and yeah, I'll do a meaty portfolio update this weekend. Yeah, this should cover the last 4 weeks that I missed of portfolio updates, so it'll be a pretty big one. So yeah, I'll cover those 4 weeks, and then maybe kind of just give a recap on like August as a whole. And yeah, so look forward to that. So it should be a pretty meaty one. And I want to thank everybody that went through the poll that I posted last week as well too, to see whether you'd want to see weekly or monthly or a combination of both as far as like portfolio updates. So yeah, I'll try to stick to the weekly cadence going forward now that I don't have a trip planned for the next couple months. So I'll stick to the weekly cadence, and then after I'll kind of give like a big monthly recap at the end of the month for the whole thing as well too. And then what's in that monthly update, that's where I'll kind of give tracking against like the goals and things like that. So I have like this portion, right, that I'll just kind of cover in the monthly updates essentially, and how I'm tracking against those. And so yeah, that's all just kind of checking against that this will kind of like shift and evolve based on how the portfolio is doing, right? So yeah, you'll get updates on that monthly essentially, because yeah, weekly or every video was maybe a bit too much on that end. And yeah, it'll be nice to check on that monthly really. So yeah, that's the video. Yeah, if you have any other questions or comments or anything you want to discuss, I'll see you in the comments. And as usual, if this was useful to you and you want more of it, definitely like and subscribe, and I'll see you in the next one. Catch you later. Bye.